And in our top business story, the International Monetary Fund has said that introducing a value-added tax in the Gulf region, even at a low single-digit rate, could raise revenues equivalent to as much as 2% of gross domestic product. The IMF's managing director, Christine Lagarde, who is in Dubai to attend the Global Women's Forum, stated on Monday that, in addition, consideration should be given for greater emphasis on corporate income taxes, property and excise taxes, as well as a continued investment in building and tax administration capacity that could eventually allow for introduction of personal income taxes. She estimated that in the Middle East and North Africa as a whole, oil exporters lost more than $340 billion of revenues last year because of low crude prices, equivalent to 20% of their combined gross domestic product. As oil prices have plunged, the IMF has played an increasing role advising GCC governments on reforms to shore up their finances. Consumer prices in Abu Dhabi jumped 3.2% in January compared to the same month last year, with the increase largely stemming from a hike in electricity and water tariffs that were introduced in January in the Emirate. According to the latest report issued by the Statistics Centre Abu Dhabi, the housing, water, electricity, gas and other fuels group accounted for the largest share of the overall year-on-year rise in prices at 81.8%. The segment's prices rose by 8.2% of the same month in 2015. Meanwhile, the food and beverages segment contributed 3.9% of the increase as the group's prices rose 1.1%. The restaurants and hotels group contributed 5.7% of the overall rise, reflecting a 4.8% increase in their prices in January this year compared to 2015. On a month-to-month basis, prices fell 0.6% in January compared with December 2015, with the largest contributor to the drop being the transport segment, which was down 3.5%. The prices of furnishing household equipment and routine household maintenance was also 1% lower. Rating agency Moody's has warned that GCC banks could face renewed pressure on their credit ratings even as new data showed that government withdrawals continued into January. Data from the central bank shows that government deposits at UAE banks fell by 11.6% in the 12 months to January, scraping levels last reached in 2011. Total deposits, including from the private sector and residents, continued to rise on an annualized basis, climbing by 4.2% against the previous year. But monthly deposit growth has crawled to a halt, with deposits in January falling by 0.03% against last December. Oil prices scraped 12-year lows in January as OPEC states produced the bloc's highest ever output. In turn, low oil prices have led government-related entities to pull their cash out of banks as they seek to make up for lost revenues from slower growth and cheaper commodities. According to a research note published on Monday by Moody's, this is hitting bank operating conditions. An IMF analysis also added that the region's weakest banks could face increases in non-performing loans of up to 18.5% after 3 years if the oil price remains at current levels. Dubai has so far recorded a total of 68.48 billion dirhams of real estate transactions in 2016, challenging claims that the market is declining, according to the Director General of Dubai Land Department. Sultan Bouti bin Majrin stated in a local report that more than 68 billion dirhams of deals had been struck in the first 53 days of the year, and the department predicts a total of 300 billion dirhams of transactions over the course of the year. This forecast so far exceeds the figure for last year. According to the department's annual report published in January, the total value of real estate transactions in Dubai last year was 267 billion dirhams. The Director General reportedly said this showed continued faith among investors of the Dubai property market. In January, the DLD's annual report revealed that 55,928 investors from 150 nationalities invested a total of 135 billion dirhams in the Emirates real estate during 2015.